Mortgage rates are on the rise as the Federal Reserve has begun its rate hiking cycle, and that is causing some early headaches for would-be homeowners. Danielle Hale is the chief economist at Realtor.com, joins us now. Danielle, good to see you here this morning. So we've been watching this march higher in mortgage rates. What does that mean to the housing market this spring?
Yeah, and a march higher is a good way of describing it. So we have seen mortgage rates tick up pretty substantially, as you're showing on the graphic right now, up more than 0.25% in 1 week. That's normally the size of an increase that we might see over the course of several weeks. And this is not the first time we've seen an increase that large in a 1 week period. So mortgage rates are up substantially, nearly 1.25 from a year ago. And that is leading to higher costs for home buyers. So at today's median asking price, we know that those mortgage rates relative to 1 year ago and the prices that we saw 1 year ago mean that the monthly cost is $375 for today's typical home for sale. And $375, sounds like a lot in certain parts of the country, sounds like maybe not quite as much in other parts of the country, but relative to that median asking price and the median mortgage payment, it's an increase of 30%. Which is pretty sizable. And so we do expect that to impact home buyers' shopping plans as they're in the market this spring home buying season.
Do you think we're teed up, Danielle, for a disappointing spring home selling season?
Well, I think it depends on what your expectations are. So if you're expecting this spring home buying season to look a lot like last spring home buying season, when prices were high, but mortgage rates were relatively low, and that helped shoppers sort of navigate those higher prices, I think then you probably are going to be disappointed. However, if your comparison is relative to the pre-pandemic period, we're still seeing home sales up above that point because we've got a large number of millennial households that are at those key years for household formation. So there's some really strong fundamental demand in the market. It's just going to be challenging for those households to navigate the higher prices that we're seeing and the higher costs that stem from higher prices and higher mortgage rates. So I do think we'll see a significant number of home sales. I do think we'll start to see inventory improve in 2022, which is going to be good news for home shoppers who have been consistently frustrated by the lack of homes available for sale. So there are some good options or signs in the market this spring, but it is going to be more expensive, that's for sure.
I want to pick up, it's Julie here. Hi, Danielle. I want to pick up on the inventory question for just a moment. On the Calculated Risk blog this morning, there was actually a post that maybe inventory's already bottomed, right? That we've been seeing a month or so of declining numbers in inventory. Do you agree with that assessment, and how much is that going to help?
Yeah, it's quite possible. So depending on the metric you're looking at, you're going to find a slightly different seasonality. But if you look at the inventory numbers from NAR, their existing home inventory did bottom in January and showed a slight increase in February. Our numbers are still showing year-over-year declines, but we have seen those declines kind of compress a bit, so they're getting smaller. So we're at the part of the year where we typically see more homes available for sale, more movers and home listings happen in the spring and as we move closer into the summer. So we're certainly past that seasonal low. It's just a question of whether or not we're going to see growth this year. Our forecast expects that we will. We've seen some really healthy construction numbers over the last year. That's going to help add new options for existing homeowners who are looking to trade up. And on top of that, we think that these cost factors are going to cause the pace of home sales to sort of slow a bit, as buyers are going to really have to think twice when they're looking at those costs that they're agreeing to signing on for that 30-year mortgage. And that's going to give the appearance of more inventory on the market because it will probably take homes a bit longer to sell.
For those still on the fence about whether to buy a home, Danielle, how much further do you see mortgage rates climbing this year?
Well, I will say they've already surpassed our original expectations for the year, and it's a very fluid situation right now. Just from the March outlook or the December outlook to the March outlook from the Fed was a significant shift in how much Federal Reserve rate hiking was going to be needed for the year. So I would say the situation is evolving, but they're already on their way to 5%. That does seem like it's very likely to hit 5% before the end of the year.
When we're talking about pricing, Danielle, how much more do you think prices can rise this year? Or do you think we're going to see more of a stabilization, especially as you see that sort of trade-off between pricing and higher rates?
Yeah, that's a great question. So as I mentioned, those higher rates and higher home prices have led to a 30% increase in the cost of housing year over year. And for general context, inflation is at record highs. It's up about 8%. The energy category of the consumer price index is up about 25%. That's one of the biggest leading categories. Measured inflation in the consumer price index for housing isn't up quite that much, but if you're looking at home prices, the cost of your monthly mortgage is up 30%. So that's going to impact people's ability to afford the same prices. And so our expectation, our forecast going into 2022 is that we expected home prices to go back into the single digit territory, roughly around 3%. I think higher mortgage rates are going to hasten our return to that slower price growth. At the same time, it's going to be hard to see prices decelerate too much given the imbalance of supply and demand that we have. So over the last decade or so, we've built 5.8 million fewer homes than we needed relative to the number of households that were formed. And so that's going to continue to be a pain point in the market, and that we're going to continue to see, I think, pricing remain relatively high because of that relatively limited supply.
Danielle Hale, Chief Economist at Realtor.com. Always good to see you. Have a great rest of the week. China-based EV maker Xpeng is out with earnings beating analyst estimates on the bottom line. The company sees first quarter vehicle deliveries rising more than 150%. Let's dive into the company's quarter and outlook with Xpeng President and Vice Chairman Brian Gu. Brian, good to see you as always here. Last time we spoke with you, there was just a sense that you were still having difficulties getting the components, the chips you needed to keep up with your breakneck pace of growth. Have you seen any improvement in the ability to get those chips?
Well, I think the chip shortage issue continued to impact the industry, and we are feeling that impact as well. I think our results, although growing triple digits, still I think is constrained somewhat by these chip supply shortages. We think the outlook for chip bottleneck will probably alleviate in the next 1 to 3 quarters. Hopefully by the end of the year, early next year, we see a normalization of that situation.
And really, Brian, this shortage in chips has caused many automakers, not just you, to lift prices. How much have you lifted prices recently, and what has been the consumer response?
Well, we have increased price twice this year. In January, we increased our prices in response to reduction of subsidies provided by the government to make up for the differences. And then in March, just a few weeks ago, we increased price by around 5 to 8%, and to really make up for the cost increases that we're seeing in battery, in chips, to make sure that we cover our costs adequately. So far, we have seen the demand continue to be very strong. We have the all-time record in terms of sales orders in hand. But I think in the long run, I think this material cost increase will continue to pressure the industry and the price increases we're seeing across industry in China right now.
And Brian, it's Julie here. Good morning. At the same time, you are now seeing more shutdowns in China, which is something that you've had to adapt to over the course of the pandemic. Now, given the experience that you've had with the prior shutdowns, what lessons can you take away with how to navigate the current ones? Because obviously that then puts increased pressure on the supply chain and also the purchase channels in China.
Yeah, it's a tremendously challenging operating environment in China and also globally for our industry because we rely on a global supply chain. I think, first of all, you have to be very nimble. For example, we have to find multiple sources of suppliers in case one get impacted by the shutdown, and also to find alternative suppliers for the same component. So we have spent a lot of money on testing and to make sure that we have backup suppliers that we can use. Another impact, I think, is on the sales and delivery operations, because some of the cities, for example, Shenzhen a few weeks ago and right now Shanghai, are all being impacted because the shutdown and the delivery and sales actually has been forced to shut. So I think we just have to be very nimble and also make sure that our operation flexibility we're building to our business plan.
So when you look at the first quarter delivery forecast, I believe it's at 34,000 vehicles, right? I don't know if there's a way to quantify this, but if you didn't have shutdowns, for example, what kind of deliveries would that be able to unlock? How much have you been able to quantify how much this has been depressing the numbers?
Well, I would just say that if there's no shutdown in terms of the limitation on our sales and delivery, physically you cannot deliver the cars to the end customer. That impacted probably in the thousands of units for this month alone. So we could have done probably a few thousand more in terms of deliveries this month if there's no shutdown in those cities.
All right, Xpeng has been venturing out into Europe. How has the Russia-Ukraine crisis impacted your rollout beyond China?
Well, I think first of all, we're still very early in our international development. We started in 3 more countries early this year. We added Sweden, Denmark, and Holland to Norway. So we have 4 countries we have operations right now. So I think we are still building the capacity, developing our network, and start selling our models right now. And also, I think this obviously the global turmoil is making us more cautious about deploying our capital and resources in Europe. So we have to probably do it in more measured ways. But I think the goal for us, as I said in the past interviews, is for us to develop these capabilities, is not to expand and to count down large quantity of deliveries this year.
So Brian, just to follow up on that, are you pausing your European rollout?
No, we're not pausing. What I'm saying is that we actually have to be more measured in terms of developing international European presence, given what's going on in Europe. But we are committed to develop a brand, operation, and service network in those countries we sell our cars.
And Brian, I was watching an Xpeng video ahead of this interview on, I guess it was new driverless technology from inside a parking garage that will park your car in a garage. It's pretty wild stuff. Is that out yet? And how do you develop stuff like that?
Well, this is actually rolled out already in our most latest OTA in our P5. This actually incorporates the capability of the LiDAR that we have on P5. It allows a vehicle to automatically drive to their parking space from multiple levels. A difference in terms of a parking garage, and still remembers the parking spot and park appropriately in there. So this is almost a level 4 like feature, but obviously in China, it's still regulatorily not permitted. So we have to require drivers to be inside the vehicle. But that technology is actually realized already.
And then finally, just circling back around to the supply chain questions. Specifically, I wanted to ask you about lithium for batteries, because I know that has been a particular issue. Leaving the chips aside for a minute, that's been another issue. Lithium, a key component in electric vehicle batteries. We've seen pricing go way up. So how have you guys been trying to navigate that particular issue?
Well, that is part of the cost increases that we had to deal with. As I mentioned, the price increase that we have announced is large part in response to increasing battery prices. I think battery being the largest cost component inside the EV is very important, and increasing raw material is definitely causing a lot of pressure on the EV costs. So that's why we had to raise the price by around 8% in our products to cover those costs.
All right, we'll leave it there. Xpeng President and Vice Chairman Brian Gu, always good to talk with you. Have a great rest of the week. All right, it's lean times for market debuts. 2022 has seen just 17 IPOs. That's a far cry from the 397 debuts we saw in 2021 that raised $142 billion. Renaissance Capital, though, says we might not return to last year's highs, but also says investors will miss out if they ignore the next few companies brave enough to, in fact, go public this year. For more, let's welcome on Nick Einhorn, Renaissance Capital's research director. Nick, where'd all the IPOs go?
Well, it's really a combination of a few things. Last year was an extraordinary year for IPOs, and like you said, almost 400 of them. And most of those traded pretty well for most of the year, but starting in about October, November, we really saw a pretty steep decline in growth-oriented stocks, which obviously a lot of IPOs tend to be, and especially high growth, high loss companies, like a lot of the big software names and other tech names that have kind of driven the IPO boom in 2021. So really, we're seeing a reversal this year. Things kind of started out very slow because of as people kind of dealt with that fallout. And then I think we may have been ready to see a pickup starting in March, but then obviously the Ukraine news came out, and that's kind of shut everything down too. So it's really, I think at this point we're waiting for a few things to happen. We need markets to stabilize a bit, and especially the Renaissance IPO index that we track that reflects the performance of recent IPOs. Right now, the average 2021 IPO is down. I think it's over 20% from its issue price. So we kind of need that number to stabilize a little bit, hopefully improve a bit too. And then we also need to see a little more valuation consensus between issuers and investors. I think part of the reason we had so many IPOs last year was because valuations were at very high levels in a lot of places. And so companies kind of wanted to take advantage of that. And now we're at a state where they're not going to be able to get the valuations that they got in 2021, especially, again, high growth tech names. So they're going to kind of need to figure out what the right valuation level is. For example, we did see last week, Instacart cut its internal valuation by something like 40%. And that's kind of a sign of the sort of correction that we're going to need to see before IPO activity picks back up again.
Hey, Nick, it's Julie, though. It's Julie. As we're watching these companies delay, what do you think is the biggest risk of doing so, particularly for companies that are already huge in the private markets? Is there any downside to waiting it out?
Yeah, I think so. I mean, most of these companies have a lot of employees with lots of stock options and other assets that are going to want to get liquidation of those, or at least start to be able to realize some of those gains. And I think we've been in the past, decade or so, we've been in an environment where you could kind of stay private and assume your private valuation would keep increasing, just because that there was so much money in VC that has driven the gains in private companies. But I think it's not really clear whether we're still in that environment. And now if you wait too long, you'll get disgruntled employees, and you might not be able to get new money coming in from VCs to kind of keep everybody happy. So, and obviously, you always want to go public when your business is doing well. And so if you wait too long till your growth numbers drop a lot, you start seeing more competition if you're in a new industry, then I think there's a risk that your company won't be as exciting a prospect for investors as it would be now.
I mean, on the flip side, Nick, we have seen a lot of examples of companies that maybe if they didn't go public too early, but I don't know, the timing has not been great. You pointed out there's been a lot of underperformance over the past year. The class of 2021, so to speak, whether companies had IPOs or they went public through SPACs or did direct listings, I mean, the field is littered with companies that have really seen some poor performance since then.
Yeah, exactly. And I think, again, that's because the valuations that many of those came at, and some of the names on this list, were definitely stretched by historical benchmarks. And particularly in software, for example, we saw many companies coming public at over 20 times forward revenue, which is a very high multiple by historical standards. So I think the good thing is coming up, from a public investor standpoint, there's going to be more room to kind of push back on valuations and make sure that companies are coming at reasonable prices. I think in 2021, there was a feeling of not wanting to miss out on the boom. And what our research has shown in the past is that when the IPO market does slow down, it becomes a much more favorable environment for investors to make money in them. After past slowdowns, when we look back as far as the dot-com bubble, 9/11, the average IPO coming out of a slowdown tends to outperform by over 20% over the 3 months, the first 3 months of its being public. So because it's kind of now more of a buyer's market than it was last year, there should be better returns for investors for the IPOs that are brave enough to come out now or in the next few months.
Are there a couple IPOs that are likely to come to market soon that might help change sentiment?
Yeah, it's hard to say exactly which ones, but we are tracking. First off, there's a lot of companies that filed either late last year or early this year that we know are eager to go public. And some of those, I think, are names that could come in this environment that are maybe a little more mature, that are profitable. Bausch & Lomb, the eyewear brand, Fogo de Chão, the restaurant chain, both those have already been public in the past, so investors know those stories fairly well. There's a lot of energy names that have filed with obviously where oil prices have gone this year, could be attractive. And then beyond the ones that have filed, we know there's a lot of companies that we track that are looking at IPOs. Our private company watch list, which we put together, has over 200 names that we think are actively considering an IPO. And not all of those will be 2022, obviously, but we do know there has been news early this year on companies like Mobileye, Sotheby's, L. Catterton, the private equity firm, that have all kind of talked about 2022 IPOs. So I think maybe some of those have been pushed back from first half of the year to second half. But we know there are companies that want to come public, and I think they'll kind of be monitoring for an opportunity.
All right, we'll leave it there. Nick Einhorn, Renaissance Capital's Research Director. Good to see you this morning.
You too. Thanks.
Mr. Secretary, thank you so much for being here. I want to ask you about that participation rate in particular, rising to 62.4%. We heard a fun anecdote earlier from one of our guests whose 72-year-old mother, who retired early during the pandemic, has just gotten a job and gone back to work. And I'm curious how much of that you're seeing out there and what ways you have and you think employers have at their disposal to try to encourage people to come back out of what was maybe premature retirement.
Yeah, no, let me just quickly stop by. The report is a good report. Every unemployment number went down. The white community, the black community, the Latino community, the Asian community, the American Indian community. But I'll tell you, what I like the most about the report is what you just asked me. The participation rate went up a bit. And I think as we think about moving forward into 2022 here, we need to continue to get that participation rate going up. And we've seen, a few months ago, we were talking about the Great Resignation. These are folks that might have had their years in to retire, but they left a little early because of the pandemic. We're seeing some of those folks come back into the workforce. Last month, we saw a lot of high school students with less than a high school degree go into the workforce. So we just need to I'm going to be really focused on over the course of the next several months is how do we continue to bring that participation rate up. It's what the president has said from the beginning, whether it's been the American Rescue Plan investment, whether it's been, what we're doing with masks and the vaccinations and all of that stuff that's been happening throughout last year. We're seeing confidence back in people going back to work. We're seeing wages rise. I know we'll probably talk about inflation in a second, but we are seeing wages rise as well. So it's going to bring people back into the workforce as well. So it's good to see that number. I think we have about 1.6 million people that have not come back in from previously to COVID-19. So we have to continue to get those folks back to work.
Mr. Secretary, there's a lot coming at American households right now. You mentioned inflation, gas prices over $4 a gallon in this country, food price inflation just really continuing to be very high and accelerating. When you're out there talking to folks, how difficult is it right now for them to make ends meet?
Well, I mean, people are certainly worried about what happens at their kitchen table. That's the biggest, and what the conversations are on the kitchen table. And, and the president has talked about, he's working on bringing those inflationary pressures down and bringing costs at the kitchen table down for families in America. We have to do that. We also have to look ahead with the Bipartisan Innovation Act that's going through Congress right now, the CHIPS Act, that will help us create more opportunities in this country for manufacturing. We also need to make sure that Congress passes the COVID relief bill. There's a second COVID relief bill so that we're prepared and cities and towns are prepared moving forward. Cities and towns need to spend that American Rescue Plan money to make sure they continue to protect their constituents and their cities and towns, folks in their cities and towns. But I mean, I can't sugarcoat this, obviously. We have a lot of work to do, and we're going to do everything we can to bring those costs down.
Secretary Walsh, when I look amongst the different sectors in this jobs report, and one of the sectors that's probably being pinched by those rising fuel costs the most, truck and truckers. We saw that was one of the few areas where we saw a decline in employment. you've spent a lot of time with truckers over the past several months, is my understanding, riding along with some of them. We talked to a trucker recently who said she's sticking with the business even as she is seeing those fuel costs up. How can we help that industry, which helps us all, obviously, keep and attract and keep truckers?
Well, yeah, I was just out in Tacoma, Washington, and Seattle, and Portland, Oregon, and I visited a trucking company, Yellow, who was putting on another class of apprenticeships. Certainly, they're part of the trucking plan that we have working at the White House to create more opportunities and pathways into trucking. You have companies, you have independent trucking companies, and I think that we need to continue to be very intentional about creating pathways into that industry. That's a good, strong industry that provides a living. Whether you're an independent trucker or you're part of a bigger company, if you're a part of the union, that's a really good industry. That industry has put good middle-class jobs all across our country for a long time. So we're focused on, that's part of the supply chain issue that the president has asked myself and Secretary Buttigieg to be part of. We created something called the 90-Day Trucking Challenge, where we have 100 employers right now that are getting, working with the Department of Labor, working with the Department of Transportation, and creating these pre-apprenticeship programs into trucking. We have about 200 other companies that have contacted us interested in joining this plan. So the focus on trucking is a real one, because it's an industry, quite honestly, that doesn't always make the headlines. It's in the headlines right now because of supply chain, and I think we have to take advantage of the opportunity of getting people into that industry.
Mr. Secretary, 1 month ago, when we talked to you, you said you would like Elon Musk, Tesla CEO, to give you a call. It looks like that may have happened, because you did, in fact, get to meet with him. What was your takeaway from that meeting? And do you think he is serious about unionizing the Tesla workforce?
Can I say that last part? I didn't hear that. You say unionizing?
Yeah, Musk, he has floated this idea or welcoming in unions into his business. Is that something you see him doing?
Well, we had a very good conversation. I was out there a couple weeks ago. We had a good conversation. We talked about the economy. We talked about manufacturing. We talked about a whole bunch of things. And I did ask the question about unionization, and he certainly said that he's not opposed to it. He said that if the workers were interested, he'd love to have those conversations. And I think it was a good conversation. I didn't go too much into the unionization of his plans. We talked more high level about the economy. I was asking him questions what he thought. I was asking him about inflation and supply chain and all the manufacturing and what he sees in his factories. So we talked about all those issues. We had a good conversation, and hopefully we're going to have another one at some point soon, just to continue the dialogue.
And I'm just curious, we haven't heard that much about that meeting. What else can you tell us? And for example, what did you think of that factory that's under construction, and how it compares to maybe some of the other automakers you visited?
Well, I'll tell you, he's built an amazing facility there, 10 million square feet. It's one of the biggest buildings I've seen, and it's a challenging building. He built it on basically a landfill, so we talked about that. We talked about, the culture of how he thinks about a company. So we touched a lot of different issues. I really focused on the medical side of his company as well, about what the research is on helping people that have accidents, paraplegics, and potentially MS and things like that. I was really interested to talk about what his company's doing there. So really some innovative things, and I was really glad to talk about that. I know it's a little different from being the Secretary of Labor, but I got intrigued about it, just really thinking about how we can help people recover their functions with their bodies after an injury, after an accident, quite honestly.
Yeah, definitely interesting stuff. On the union front, I did want to bring up what's going on at the Amazon warehouse at Staten Island, where they're voting, I believe, as we speak, about whether to unionize. Or Max Zahn, I've been watching his vote count now, where it looks like the union does have the lead. What conversations have you had, if any, with the folks there making those efforts? And then what, I guess, if we see that Amazon unionization vote there, do you think we'll see a wave of that across the country?
Yeah, as a Secretary of Labor, I don't have conversations necessarily with people about when an active organizing drive is going on. I'm in a very different role here as Secretary of Labor. Certainly, I encourage people, if they want to join the union, they should be able to join the union. I support that. I support the PRO Act, as does President Biden. But I also don't. I'm not part of the conversation how you should organize when it comes to something like the Amazon facility or Starbucks or some of these other negotiations going on. Because at the end of the day, way. We saw with the Amazon situation, it ended up at the National Labor Relations Board, which is indirectly under the purview. Well, it's not really under my purview, but it's a separate agency. So I want to be very careful when I look at that. But I certainly encourage workers. Workers should have the right to organize, and employers should allow them that free right to be able to negotiate and organize if they choose.
All right, we'll leave it there. U.S. Labor Secretary Marty Walsh, always good to speak with you. Have a good weekend.
Space, the final frontier. Well, we know about SpaceX and Blue Origin, but there are some other names in the space race as well. And today, we're highlighting Space Perspective, which will offer a 6-hour trip via what is essentially a massive balloon. Those trips are going to be starting in late 2024. For more on this, let's bring in Jane Pointer, Space Perspective co-founder and co-CEO, who joins us live now. Jane, it's great to have you on the program this morning. Tell us a little bit about your offering. How does it differ from the other big names that we have heard in the space tourism industry, which has really exploded lately?
Yeah, so experientially, we've really reimagined space flight completely, right? So I think when we normally think of space flight, we think about spacesuits and high Gs, discomfort, lots of training, a lot of excitement for sure. So we've completely reimagined it. And so it is, as you said, a huge balloon the size of a football stadium that allows us to carry this pressurized capsule to space very gently and smoothly. And so that gives us the opportunity to let people go to space and experience the quintessential astronaut experience that really otherwise would not have imagined themselves being able to go to space. There's a bar on board, for example, which, I think that every self-respecting spaceship should have a bar on board, but you're certainly not going to be able to find that on every one of the flights that are going to space, because it's just not practical. But for us, it certainly is. And of course, there's a loo, because if you've got a bar, you need a loo, and we're in there for 6 hours. I mean, it's completely different experience.
Jane, I have to tell you, every time I hear about space tourism, I feel torn. On the one hand, it sounds like an amazing experience. And on the other hand, it just feels like such a 1%, 10% conversation because of the cost of that flight. I know we just put up a number there, $125,000, but what is going to take to make this more affordable? More, this experience, having that to a wider audience.
Yeah, absolutely. So at Space Perspective, we're focused on making it initially physically accessible and then financially accessible. So to increasing numbers of people. So $125,000 is already significantly less than anybody else in the field. And, it is still going to space. But as we scale, remember, we're at the very beginnings of this industry. And so every industry that has changed the world, like aviation, like computers, when they start out, it's very difficult to imagine vast numbers of people either using computers or airplanes. And now, look, computers are in everything. Airplanes have changed the world and our lives. And the same is going to be true for space travel. It's just going to take a little time for the prices to continue to come down as it scales. For us, for example, we're starting here in the US with our flights, but we will be scaling around the world and setting up operations elsewhere. And even that will help us start to bring down the price fairly significantly over the long term.
Jane, 100,000 feet is how high the balloon will go as planned. Give us a sense for what that looks like when you're sipping on your gin and tonic up there in the balloon. What can you see? Is that suborbital by definition? What are you going to be able to look out of the window to?
Yeah, exactly. We're part of the suborbital flight community, which is very exciting for us. You will have that incredible black sky like you're seeing here. When we take you up pre-dawn, you'll get the most outrageous starscape you've ever seen. Then the sun will come up and you'll start to see that iconic thin blue line of the atmosphere. It is going to be everything that astronauts talk about when they talk about seeing Earth from space. And I think the important thing for your listeners to remember is that for astronauts, this isn't just a pretty view they're seeing. It is profoundly moving. And it actually goes back to the experience that I had while I was inside a project called Biosphere 2 just a little over 20 years ago. I was in there for 2 years and I was completely reliant on my Biosphere. And it turns out that sort of experience and the perspective it gives you is very similar to that which astronauts have. And it really changes the way you perceive the world forever. And that will actually have a trickle effect across society as increasing numbers of people go. I think it's an incredibly important component of space travel, and is one that is greatly overlooked, I think, as people think about the value of this for society.
I realize that we're talking about a lower price point than somebody like Blue Origin, but you're now accepting payment in cryptocurrency. I'd imagine you're appealing to some of those crypto millionaires. I mean, those who have made significant amounts of money who are saying, look, I want to put this to use with a cool experience.
Yeah, exactly. So for us, being able to offer taking the deposits right now, it's $125,000 for a ticket. It's $1,000 and up for a refundable deposit. To get you a place in line, or you can also put more deposit down to fly earlier. And so, yes, absolutely. We have opened this up to the crypto community. We think it's really important that we make it accessible to people in a whole variety of ways. And crypto is part of that. Super important for us to open this up to as many communities around the planet as possible. That's space, right? I mean, one of the things that is so exciting is that when you think about spaceflight and my experience in Biosphere 2 and what astronauts talk about, they really talk about in very moving, poignant terms, the realization that we are one human family living together on spaceship Earth, which I think is a message that we could all absorb today. And so being able to offer crypto is just another component of that for us.
Well, Jane, you've got us all now dreaming of going up in one large balloon. It sounds like an incredible experience. Jane Pointer, Space Perspective co-founder and co-CEO. Good to talk to you today.
Formula One season is underway, and along with it, the race is on for big paychecks and big notoriety for the globally renowned drivers. Let's zero in on one of the sport's most storied names and one of its favorites to win a lot this season, McLaren Racing. Joining us now is McLaren Racing CEO Zach Brown. Yahoo Finance's senior auto correspondent, Praz Subramanian, is here as well. Good morning to you both. Zach, avid watcher of Drive to Survive on Netflix, and one takeaway for me has been this is not the same team from when you took over. You've put a lot of key turnaround efforts into place there. How have you gone about turning around this brand?
The team's doing a great job. I think like any sports team or business for that matter, it's all about the people. And so we've made quite a few changes to the leadership team. Andreas Seidel, who runs our Formula One team, has done an excellent job. And, everyone's working really well together. Of course, we've got two great drivers, a great brand, as you mentioned, with a great legacy in the sport. And it's all coming together, but it's not easy. So for every good day, there's a bad day not far behind, but that's why we love sport.
Hey, Zach, Praz here. So the 2022 season, a little different start here because of the new car spec this year. I know you guys are sort of your growing pains with that car, but hopefully things are going to improve. What's your take on that in the season start so far and in the new cars that you guys have?
Well, I think it's very exciting. If you look at the first couple races, they were very exciting races. The last one we had, I think it was 4 or 5 lead changes amongst the front with 10 laps to go. The concept behind these new cars were to make the racing closer, and I think in the first 2 races we've seen that they've achieved that. Also, at the same time, when you have new rules, some people are going to get it right, some people are going to get it wrong. We have not got it right to start with, but Formula One teams are very good at reacting quickly to data. So I think so far both races have been very exciting. I think the field will condense in time, but I think the kind of headline goal they had of making the racing more exciting, they've achieved.
And Zach, the pandemic really hit the sponsorship side of the business pretty hard. Has that come back to pre-pandemic levels?
it's beyond pre-pandemic levels. It's been outstanding. There's probably more commercial partnerships in Formula One than I've ever seen. We've announced most recently Google, so it doesn't get much better than that. And Cisco's renewed, and Aero, and then you've seen with some of the other teams, the Oracle has joined, Saudi Aramco. So the commercial side of the sport, in my 20 years and being around Formula One and 6 years running McLaren, I've never seen the sport stronger.
Hey, Zach, why do you think that big tech has such a fascination with F1? Is it all kind of like this, the high speed nature of the technology? I mean, we're talking about Cisco, we're talking about Darktrace, talking about Dell, but also a lot of crypto companies too, right?
Yeah, crypto have come in fast and furious. I think there's about 5 or 6 that are in the sport. I think the technology, we're the most technically advanced sport in the world. Our partners are truly integrated into our racing team. So I think technology companies find there's a lot of similarity in the R&D. They can use Formula One and McLaren or the respective racing teams as a bit of an R&D lab. And then, we're the largest annual global sporting event. So as they're looking to entertain customers around the world, build their brand around the world, Formula One is a very efficient way to, as we say in Darktrace's case, help make you famous fast.
In our world, Zach, seemingly every day we're hearing about a new electric vehicle launch. Now, of course, what you guys are driving around a track is not electric, but when will it be, you think?
That's a good question. Our engines are the most thermal efficient engines in the world. We're going to biofuels. We have been hybrid since, I think it was 2013. And so, we get a lot of attention because of our power unit, but there's so much more we do in sustainability around the world with our partners. And we've been carbon net zero since 2011 at our facility. So I think we're just about ready to land on the next set of engine regulations, which will start in 26 for 5 years. I think we'll see more electrification and hybrid. You'll see some biofuels come in, but the soonest it would happen at this point would be 2031.
Hey, Zach, so kind of the big news last night was the announcement of the Las Vegas race, the race on the Strip coming to the U.S. next year. What does that mean for you, for the team, and for being racing in Vegas under the lights? And also, it's a third race in America. How big is this market for F1?
I think it's time to get ready for some blackjack. No, in all seriousness, I think it's going to be unbelievable. Las Vegas, I believe the race is going to be around 10 o'clock at night. You're going to go down the Strip. You're going to see Formula One at its best. I think 3 races in North America. It wasn't long ago we were trying to build the sport in America. And I think thanks to Netflix and Austin and Miami, I've never seen the demand for a Grand Prix like I've seen for Miami. That's coming up soon. I think Vegas will be of the same stature. We'll have a new TV contract shortly. So I think Formula One has absolutely taken off in North America, but Las Vegas will be great for around the world. So we now have the luxury problem of having more cities and countries that want to have Grand Prix that we can host. So if you look at all the metrics in Formula One, TV ratings, sponsorship, viewing figures, demand for races, and you've even got teams, new teams that want to come into the sport. So every metric is up. The demand is strong. Couldn't be happier with the future of Formula One.
Lastly, Zach, just again, from watching the show so religiously, there are a lot of big personalities in this sport and big egos. As the CEO, how do you manage the talent effectively?
Now we can say, how big's my ego? It's as big as anyone's in pit lane.
You said that, I didn't say that.
No, you know what? We all, while we're fierce competitors, we're all very similar. I think that's one of the things that Netflix has done so well, is it's brought forward all the personalities in the sport, where a lot of other sports are almost exclusively played on the field. There's as much sport that takes place off the racetrack as on, and I think Netflix has kind of captured that dynamic of the sport. And, I think in a team environment, you all come together. You need to be humble, work together. And I think having an ego is okay. It's when it moves to arrogance that I think it becomes destructive. But a little bit of confidence for a sporting team is a good place to be.
Duly noted. McLaren Racing CEO Zach Brown, good luck to you this season. Looking forward to staying in touch. And thank you to Yahoo Finance Senior Auto Correspondent, Praz Subramanian.
Thank you very much. Thanks for having me.
Cannabis player Trulieve is out with earnings, delivering an 81% sales increase for the fourth quarter. The company is looking for more than $1 billion in sales this year as it expands the number of dispensaries. Joining us now is Trulieve's CEO, Kim Rivers. Kim, good to see you here this morning. 81% sales increase, very strong in a very competitive market. How did you drive that gain?
Yeah, so I mean, it's really our whole strategy is driven on increasing fundamentals and staying true to our strategy that we announced in 2020, which is expansion through a regional hub strategy. We increased both via organic growth and via acquisition. We completed the largest acquisition in cannabis history in October. And so really proud of the team and our ability to execute on the fundamentals. We increased both on the dispensary count and on our supply chain up around 100%. And so really phenomenal year, and kudos again to our entire organization.
Hey, Kim, it's Julie here. So you saw that big growth. I'm curious about margins and profitability. You guys are posting positive EBITDA, but still net losses. How are you working to sort of improve those levers on growing the margins?
Yeah, so this was actually our first quarter post of a net loss, and really that was 100% attributable to the acquisition. If not for the acquisition, we would have had another strong quarter of net income. So look for us, again, as those one-time or non-recurring charges flow through the financials, which should be cleaned up in Q1. We'll be right back on track where we have been in terms of profitability, both in the net income line as well as in the adjusted EBITDA or EBITDA line. So, again, just some right sizing as we absorb and digest, again, that very large transaction that we completed at the end of the third quarter.
Kim, just staying on that, what Julie mentioned on margins. So your gross margins were down to 43.4% versus 71.2% last year. Are you seeing any inflation in your supply chain? What explains that beyond, I guess, the acquisitions?
Yeah, so if you adjust out for the acquisition, which we shared on this morning's call, we actually end with approximately, it's about 59% adjusted gross margin. So it's really a 10% swing when we look at it on a quarter-over-quarter basis, again, with that big acquisition coming in. And so the acquisition diversified our platform into additional markets, some of which are not optimized from an efficiency perspective. We will be adding supply chain in those markets throughout the rest of the year, and we do expect those margins to increase throughout the year. We did give longer term guidance, set out 2 to 3 years with margin profile that we expect to hit at 60% at minimum on a normalized basis, along with 40% minimum EBITDA, which we believe is very achievable. To answer your question specifically about inflation, again, it's very different from market to market. Keep in mind that, of course, cannabis still is illegal federally, so our ability to have distribution continuity across the U.S. is non-existent. And so we do have, again, differences from market to market. What we're seeing is not necessarily an impact in particular basket sizes per se, but what we are seeing is consumption in general has softened a bit, coming off of the highest consumption time frame that we've seen as an industry during COVID-19. It makes sense rationally. Folks are stuck inside their house and have more time during the day, whereas now, again, that's normalized. You add in inflation, you add in choices that consumers are having to make with expendable dollars, and the fact that our industry is primarily a cash business. Certainly, we have seen a little bit of softness as it relates to consumption, but again, not on a per transaction basis, just less consumers entering our slower growth period.
You mentioned, of course, the fact that it's not legal on a federal basis, and we've been talking about this issue a little bit this week because the House is voting on the MORE Act, which would decriminalize marijuana. From what we've been hearing, pretty standard view that we're not going to see federal legalization this year. If we did have something like safe banking pass, which prospects for that perhaps a little bit better, what does that do for your business?
Yeah, so the banking, as we just mentioned, it's an all cash business currently. So having banking relief would do a number of things. First, it would hopefully allow us to expand payment options for consumers, providing greater access to cannabis across the country. It also would lower our cost of capital by allowing our access to typical lending rates. We have been subject to higher rates due to the fact that we are limited in terms of our banking partners currently. So having a more diverse network of banking options would certainly improve cost of capital. What we would love to see is some relief from a tax rate perspective, along with safe banking. Currently under 280E, just to give you a number around that, last year we paid a significant amount in taxes. I believe there was over about $100 million in taxes that we would not have had to pay had we been not taxed under 280E. So significant changes to our financial profile would come with the passage of safe banking, along with some additional federal reform. I would like to note, though, that I do believe that it's incredibly important for us to not only focus on safe banking, but certainly there I believe needs to be some form of criminal justice relief with letting out and expunging records. There should not be anyone behind bars for cannabis distribution or sales, given the fact that here I'm sitting with you on Yahoo Finance and in this seat selling cannabis in legal markets in the state structure today.
Kim, I have 10 seconds left. If cannabis does become legal, a lot of new entrants could come into this marketplace. How do they start? Do they start with cannabis? Do they start with edibles? Do they start with buds? How should they start bringing this into their life?
Yeah, it's going to depend on the individual. We certainly see, and I would say that inhalation products are a fantastic way to understand what your particular tolerance level and your response to cannabis is, because it actually stays in your system at a lower time period, about two hours or so, or fast-acting edibles. And I can't stress that enough because, edibles do digest through your system in a different way. And so the effects of those are going to stay with you between 4 to 6 hours. So would say start low, go slow, lots of different form factors out there and lots of different options for you to begin your cannabis journey.